Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Let's take a look again on gold market. So actually gold is unstoppable, as you can see. So it even doesn't make sense to take a look at the daily chart. Here's we will discuss a couple of moments how usually to deal with such a market. So that is just keep thrusting and thrusting, ignoring our overbought technical barriers and so on. How it would be safe to trade it, and what in particular you could keep an eye on. Second, we'll take a look at trading stop that we discussed yesterday. It is right now completed, but some nuances exist here. So, but first, since as I said, you can't see anything on the daily chart, let's return back to our major big picture. Those of you who are watching and reading our weekly reports, you are familiar with this picture because we have set it almost 2 years ago when we start discussing the upside targets of the gold market. And you can see actually market is coming to the historical all-time high target around 41.20. This is our next and major destination point. So since market stands relatively close, just the $200 may be difference for a current pace of market, and with the background that we see, I do not see that it will be a really big problem just to reach this level. So probably market now is standing too close to it, and it works like the magnet usually. It's big targets, especially as the all-time historical targets. It's really attract the markets. It's really work as some gravitation. So that's probably where the market is going right now. From that standpoint of view, since you know that market is trying to reach it, and we should not get any significant pullbacks here, it's relatively safe to consider some pullbacks, some minor retracements for position taking, and until market stands below this target, until it hasn't reached it. Once it will be reached, that will be a different story. We will discuss in the weekly report. Also, we will use such terms as a long-term volatility breakout to set the next upside target. I suppose that will be interesting. Actually, we already trade this since I'm staying with the Forex Peace Army for a long time, and maybe somebody remembered how we trade gold market here. This also was a volatility breakout and how we set the target. So it's already has been done previously 6-7 years ago, and that will come again, but the scale will be significantly larger. Here we could justify some really big numbers, and well, usually, and as historically you could see, it has been reached. So that's what about the long-term picture. Now let's go down to the daily intraday charts. So on the daily, as I said, you see nothing. We have a great thrust, but since we do not have any moderate retracements, it is useless for us right now. Market because just keep going and keep going. Now about some technical moments, some strategy moments, how to deal with this market that's moving and moving. So usually the common thing suggests two possible trades. First, you could try to take the position on the retracements, and since market stands at overbought, usually you're going out at the previous top, or at least you could split in parts to your position, closing the half around the previous stop and keeping the rest for the break-even stop or even high standing stop. Once market did it again, you repeat the same stuff. On retracement, it actually has how we did previously. Recall our grabber, this was grabber, we traded it. Recall yesterday entry of this retracement. That's absolutely the same stuff. Just confirm this retracement with some intraday particular patterns that lets you to step in with some background. You can see some, as yesterday, for example, we've got the bullish momentum trade. Also, it was supported by the bullish grabber on the 4 time frame chart. I will show you a bit later. Here was daily grabber. So that's the idea. That's first strategies that you could follow. Catching the pullbacks, watching for patterns, what the shape of the market takes on the intraday charts, and taking position out either on the previous top or, as I said, split in parts. Second approach is to identify short-term tendencies. For example, on the 4 time frame chart, we already talked about this. Market stands on the short-term channel, right? So 1 step, 2 step forward, 1 step back, and it's going. Watch for these levels. So market, touch it. You're finding here some maybe patterns or something. In particular, in this moment, it was daily grabber. Take position with a very near standing stop order and repeat the same thing as with the strategies that we discussed just a few minutes ago, with the out on the top and keeping the rest of the position maybe for the upward direction. So here's, by the way, gold start moving. That's actually what has happened yesterday. You can see we said great opportunity for a momentum trade, long position around 38.12. Later, on the next candle, we also have the Polish grabber on this reaction. That was grabber suggests taking out of the stop. That's why once it has been formed, it has become clear that market will not stop at the minimum target that we discussed around 38.45, but the grabber itself suggests taking out of the stop. That already has happened. You can see what we get here. The same stuff on the hourly chart. 38 support and straightforward upward direction. What we're going to do currently? Currently, guys, it's not many things that we actually could do because market stands right at the top. Once again, we need to wait either for some minor pullback or something. At least you maybe could try to actually drop your time frame significantly, even to the 5-minute chart, finding the minor tendencies here with the same shape. Here is the big tendency with the follow time frame chart, but the minor tendency stands on the 30-minute chart, on the 15-minute chart. You can identify the same the same shapes of the minor channels because market is standing higher. It stands in some upward directional move, and apply the same stuff. So there is no other ways how to deal it. Either you take the minor risk and rely purely on the direction without any clear patterns, controlling the reversal moments, controlling the possible forming of the reversal swings and so on, and out on your stops if the tendency is breaking, or you're relying on the pullbacks, such as we saw yesterday and last week with this retracement here. So dealing in the way how we did this yesterday. So there's no actually other ways. For a big investment, currently I can't say that it's actually too late, but of course you do not want to buy near the all-time major target when the significant pullback would start by the previous historical moves. And you do not want to buy on a moment of the volatility breakout and overbought. So if you would like to add more to your strategic reserve of the gold, maybe it makes sense to wait a bit and wait for some moderate retracement. Or at least if you will start dealing with some minor tendencies, buying here by the small parts, and market is moving significantly higher, of course you could just keep it in these positions. So there's lots of different ways how you could accumulate reserves. But any long-term investment for strategical purposes, it suggests very low margin, very low leverage for trading. 1 to 2 ratio maybe hardly larger. So it should be some different approaches for investing purposes and for speculating purposes. So, but this is already some history, some theoretical issues. That's probably, it's not very interesting to you. Well, that's probably all for now. Let's see what will happen. As soon as we will get some maybe another step of this way that we've got recently, we definitely will try to use it.